Hey guys, and welcome back to another tape reading session. We are looking at the ESU 2022 futures contract, so from last year, and we're going to start on the 1st of August. So let's do that. We pull back, we use our replay tool, and we set it right to 155. And yeah, now we click through price action candle by candle. Before we do that, we label the most important buy and sell side. Therefore, we could use the 15-minute time frame really to get an idea of where we currently are. So I'm going to be switching between the 5 and the 15-minute. Alright, so first of all, we have buy side right here, which would also be the high of that previous week. So we could label this as previous week high buy side. So we would have sell side just below this low. Label this as sell side. And this is our AM session low, but we do not have to write everything down. This is our Friday's low. This is also going to be labeled as sell side. This is our previous day's low. We're going to label this previous day, previous week, and stuff like that. That's what we're going to label. But if we just use sell side, we should be alright. Alright, so let's see. We are going to drag out the biggest 15-minute fair value gaps that we have available. Right here, a fair value gap. And here's a tiny little one. That also has been respected. We never closed above it. That's the important part. And this one. So this video might take some time, but this is really just me practicing. And with this video, I hope that I can motivate some of you to pretty much do the same thing. Alright, we have a tiny little fair value gap right here. This one right there. We could also use the inversion really, because this would cover more. This would also cover this bullish fair value gap. That's the 15-minute inversion. We have a bullish fair value gap right here inside our sell side. So we could look at this because this actually kept supporting price once already. We could use this one where we went below. And we will see how that looks like on a 5-minute time frame. Because we do not want to have too many fair value gaps that we are going to look at on our chart, really. Alright, 15-minute time frames. I think we covered most of it. So we go back to the 5, because that's where we're going to take our entries from. Let's refine our 15-minute fair value gaps. Alright, so about here, we can't really refine it much because the price has been delivered pretty efficiently inside here. We have a tiny little fair value gap that we could use. So we're going to keep using it. So about this move here, we have our fair value gap right here. That's one that kept holding price. And let's check to the left what we have here. We also have this inversion on this move to the upside. We do not have a bullish fair value gap where we could see support. So, yep, this is pretty much our best bet, this inversion right here. And this bullish fair value gap, we can extend that a little bit because it kept supporting price. Then we closed. I don't think we closed below that here. We kept holding support, but then we cut through it with a gap and we immediately rejected out of this inversion. Alright, so it's 150, 155, 2 AM. Alright, so here we go. 2 AM. We already have a market structure shift to the upside. Market structure shift bullish. That's the first thing that I would put my attention towards. See this strongness placement with 2 volume imbalances. And this fair value gap is now a inversion. Same for this one, we would expect support here once again. So we could pretty much drag out the current fair value gaps. This one right here. No, I think I just deleted that. This one right here. And this one right here. We're also going to drag out the volume imbalances. This is a volume imbalance. So this is just a setup before we get started, but it's necessary. Alright, so let's see how we move from here. Ideally, we would place our entry of this first inversion. That's at least what I would do. Maybe of that volume imbalance, I would give it... No, I forgot one important thing. Where's New York local time? Midnight. Right here. This is our midnight opening price. We use a one line thickness dash, then we're gonna make it black. New York midnight. Put it to the right. Alright, so we close below it. Is that correct? Yep. We pushed back above it, so I would also like to see support of here. We could give it a 5-handle stop loss. We're not going to take the full stop if we're going to get stopped out. But the closest buy side would be around these highs. So this would be my first target, this high right here. Buy side. I would just go for straight 5 handles, which would deliver me to the high of this fair value gap. It's lined up with, let's say, this buy side. We have buy side resting above all these highs, which would also be the Asian session. Alright, and we would have also cleared that Asian session low during London. Now we have a market structure shift. This is a nice formation. Right here we would have gotten our fill, so we're going to buy one contract. And we want to see this fair value gap, or at least those two fair value gaps, to be respected. We already respected and closed in this volume imbalance. We had a new higher closing candle. This is what we like to see. Right in here, we close back inside. I would add one more contract, close below the volume imbalance. Now we wicked inside of this lower fair value gap right here. This is not the area where I'm going to cut some risk because we close below this. I understand that the market is likely to retrace into this, and note also what we left behind. A set of equal highs. So now we touch the 50% of this displacement leg. No reason to cut risk because we closed below this most recent discount that price has left behind. And note where we closed, immediately rejected of this double confluence area of this 5-minute inversion and this 5-minute bullish fair value gap right here. That's where those two fair value gaps overlay. Then we also have this bullish one right here. Can also get rid of that so you guys can see. Usually I like to use those gray boxes because if they overlap, they get a little bit darker. And then I know that's a high confluence area. That's a little bit annoying that I can't move that anywhere, but let's just continue. Heading for those equal highs. Okay, another rejection. We can see this volume imbalance right here so far is holding us. It's still holding us. We wick inside of it. Alright, so now we have a new push to the upside. That's what we'd like to see. Now we have a triple high. We're back above this bullish fair value gap, back above this volume imbalance. How do we open up? We open up leaving behind a new bullish volume imbalance. We could use that for a continuation. Now we have 4 equal highs. What's the time? 2:55. So now we have the London Open. I would be fairly confident holding through it. If we get a close below here or close below the midnight, I would cut the position. And as expected, we hit our 5-handle target. We entered right off this fair value gap paired with this volume imbalance. We gave it some room to breathe because if we would have closed below this fair value gap, I would have cut the first contract. So we already secured our 5 handles, so we can sell one contract and let the other one run into our buy side target and just trail it basically. Okay, so we took those equal highs. This was pretty obvious. We saw all the wicks to the downside, how we are holding this volume imbalance. We open up with a gap down, but we immediately rejected out of this fair value gap. So this is ideally what we like to see. Note that we now also close above this bearish fair value gap. So this should now be an inversion. And I would really like us to see to get delivered into parts of this fair value gap. We're going to split it up so we know, okay, did we already touch the equilibrium or the consequent encouragement of this fair value gap? So let's see. Very next candle keeps holding support. We leave behind a new bullish fair value gap. We're not really interested in the area below us anymore. Alright, this would be considered our breaker block. This candle right here, or the most highest up closing candle, 1, 2, those two. We never violated that either, but I didn't draw it up. We didn't need it. This would be a fair value gap. So let's see, we cleared this buy side. We can see we wicked above it. So we took that buy side liquidity. But if you're in with a second contract, I would not like to see price to go back below the low of this candle, so I would put my stop in profit already. We continue higher and also holding this. We could easily bounce off this level, so that's what I'm watching for. We came inside of it, bullish engulfing candle, highest close now. Let's continue. I did not want to do that. I misclicked, but we can see we bounced off here, bullish engulfing. We closed back above this inversion. We kept holding support. We pushed inside of the bigger 5-minute fair value gap. We got rejected off that first 25%. I would have closed the position right here. Or maybe once this candle is going to close, because that would already have been a 10-handle move. I'm not looking for more than 10 handles if I'm scalping like this. And if I see London has the potential to move and deliver me 10 handles, I would certainly do that. Alright, so it is what it is. I'm going to cut this position now. It's not the profit we expected because I unfortunately clicked the wrong button trying to skip ahead. But we're still able to tape read. Let me just go back to here. We're quickly going to do the same thing again. We bought the first contract right here inside of this volume imbalance. Then we continued. We added to the position right here. Now we're in with 2 contracts. We watch and see how this fair value gap plays out. And depending on your account size, you could also add a contract right here. As long as everything's playing out, you can cut your risk pretty easily. Once we close below a certain level, like for example the midnight, I would cut 50% of my position at least. If not, I would likely close the entire position. So we continue higher. Right on this candle, we would sell our first contract because we already secured 5 handles. We left behind this 5-minute discount. We keep holding support on this newly formed inversion. We got inside of it. You could do the same thing right here. We measure our quarterly ranges to get a better idea of what's happening inside this fair value gap. So we see we're inside that first quarter. Getting rejected. Nice, bullish engulfing, that's what we like to see. Push up higher. So now we're going to secure our 10 handles. We are selling 1. Alright, we secured 10 handles already. At that time I would have closed the chart, especially once I saw that the London Open push went towards the direction we wanted to see. So that was setting up at 2 to 3. That's why I always start the London session at 2 AM. Most of the time the fake out move is happening even prior to that. And yeah, as you can see, of course, we have our fair value gaps, so our support areas from the left. But if we get rid of them, so you can clearly see what's actually happening inside of here, is we cleared sell side, we cleared sell side once more. We had the New York midnight opening, we closed below that with a volume imbalance. We had a inversion right here that also kept holding. And a volume imbalance here that kept supporting price. But I didn't need that. We had enough fair value gaps that we could bounce off. so we did not have to look for inversions whatsoever. Alright, so with this push into our 5-minute bearish fair value gap, we left behind a new bullish one. We could do the same thing once more. And remember, this is practice, so you can do it actually live. And I'm doing this right now every weekend, also recording it now, so yeah, maybe to motivate you to do the same thing and actively start listening to price action. I have never seen, okay, maybe back in August of 2022 I've seen this price action, but this is just from looking at the candles and what they want to tell me and how I can get into a trend. Of course, you could simply look at your pattern with your market structure shift. Everyone knows how to get in those 2022 model setups. So, but still, you can still listen to price, and at least in a way of, okay, so let's say we would have entered on this fair value gap right here at the high because we missed this initial move, and we still expect that we're going to deliver at least for 5 handles into this 5-minute bearish fair value gap, since we are bullish right now and we keep holding support. At least this is what we expect at this point in time. We leave behind a discount. So how would I place my stop loss? I would place it at 5 handles straight away, and then I would really watch this fair value gap. Let's say we get a candle close below the 50%. That wouldn't be the ideal scenario for me, the best case scenario. And if I would have been in here with 2 contracts, I would close at least the first one. If we get the close below this bullish fair value gap, making this a inversion fair value gap, I would exit the entire position. So I'm actually never taking a full 5 handle loss. Hope that makes sense. Alright, so now all the attention goes to this bullish fair value gap. Let me drag this up and see how we continue. So we've been rejected off that first quarter of this bigger 5-minute. What's the time? It's 3:35, so we're still within the London opening hour. We're still inside this 5-minute. We opened up with a volume imbalance, and we kept holding this 50% level. This is interesting. I wouldn't continue since we already rallied into this level. I would just watch it. We already secured 10 handles. This is the low probability continuation, if you know what I mean. Let's say you enter off consequent encouragement. My stop loss would be 1 tick below this right here. I wouldn't go for a full 5-handle stop loss and give it enough room that it can even wick inside this bearish fair value gap. I wouldn't allow that. 1 tick below this candle slow, the candle that traded the fair value gap, target buy side or the 50% of this range with 5 handles. Sorry. And watch this trade play out. Alright, we can see we're still holding at 50%, but note that we also left behind a bearish volume imbalance right here. And I'm just using those areas to create my interpretation of what price is going to do. We can see we're still holding a new bullish volume imbalance. We keep delivering. Note where we close. So we kept holding that 50%. So at this time, if you would have entered into that continuation, 100% simple, no reason to cut your risk. Of course, wicks to the damage, but that's why we allow it some room to breathe. Let's watch the time. Right here it is 4 AM, New York local time. 5-minute bullish volume imbalance. We continue up higher. We filled in this 5-minute bearish one. And at 4:05, we rejected. We never closed back above this bearish one. So this is our most recent, you could pretty much call it a bearish fair value gap. It's the same thing. Just, let's say, yeah, volume imbalances and imbalances in general, a fair value gap is, in the end of the day, a inefficiency that price could use to deliver us into a specific direction. As we can see, we've been rejected once more of that first quarter. And note where we closed. We closed right on that 50%. So at this time, because we did not see that continuation of the 50% level, we've been rejected. We also closed below this discount. I would cut my risk. would maybe even close the entire position. Let's see. Very next candle manages to close below. Note also that we leave behind a bearish volume imbalance. At this time, I would have likely been out of the entire position. And if not, right here, once I would have seen that bearish volume imbalance, another open, then we kept holding resistance on this bearish volume imbalance with this wick. We got back inside of it after we opened up with a bearish volume imbalance, and we closed where? Below this 5-minute bullish fair value gap. So this would now be a inversion. So at this point in time, if we would have waited for the candle close, we would have already taken one contract off right here. So this would be, if we were to enter on that 50% level, a 1-tick stop. And this would be, 1.5 handles you would have lost on that trade, instead of waiting until your stop loss is being hit, where you would lose and completely, entirely free handles. That's not what we want to do. We listen to price, and if price is not holding up with our ideas, we simply cut the trades. We do not have to wait. We do not give it that extra room once it unconfirms a bullish fair value gap. There's no reason to let it continue. And as we can see, now we very likely are going to be stopped out. So we get rid of this position, but now we're going to watch this fair value gap as potential inversion. It's 4:30, we're still inside kill zone, and see how many bearish volume imbalances we leave behind. All my attention right now would go to this inversion, and we should see enough resistance here for a delivery into this short-term low right here, and maybe even to the 50% of this fair value gap. And because this bearish volume imbalance hasn't been filled so far, this is also high confluence for me. Note the only fair value gap we left behind also happened right where we had this unfilled volume imbalance. So this would be a high confluence area where I would try a short. And that's what I mean, you can try a short, you give it, let's say, free handle stop loss, but if we already invalidate this area by closing above it, I cut risk. Very simple. Target free handles, I would not really look for much. Let's see what that next candle has to offer. We closed right at the high of this bearish fair value gap. We just tried to sell one, not going with much more because we already secured 10 handles right here. We keep holding. Let's see if it can deliver us into our target. Perfect. We are going to immediately cut the position because this is our short-term low we wanted to see being taken. But with this close right at this level, if I would see this on a live trade, I would say let's continue with one more candle and see where this closes. Note it's also closing right at the low of this fair value gap. 250, that's 5 handles. We are going to buy one contract here, so we made another 5 handles simply with this move. We entered right here with this move to the downside. Very simple. That giveaway from what? Price action. We do not really have a market structure shift here or your liquidity setup. I don't even know. Okay, we took buy side and stuff like that, and we're inside this 5-minute bearish, or we rejected from it. But all this whole trade idea I received from watching the most recent 5-minute discount. We closed below it. We left behind a bearish fair value gap, unfilled volume imbalances, and even more resistance inside this area. Very easy to frame a short of this, at least into the short-term low, or for 5 handles. Note that with this next candle, we also closed below the 50% right here. So we could continue to see maybe a move towards the New York local time midnight. What's the time? 4:45. Let's see, very next candle. Note how we open with a bearish volume imbalance, but we closed that in. We closed it in completely. So we have new discounts where price could continue to deliver lower. We have our market structure shift with this break of a short-term low. So we could label this as market structure shift bearish. Have a new bearish fair value gap right here as well. So now we could also look at this inversion. We didn't really close below it, so it's not a valid inversion for me right now. We're still holding inside. We just opened below it. Alright, so we push back up above the 50%. So at this point in time, I wouldn't expect a continuation of this level. Note, okay, we are out of kill zone anyway. It's 5 AM now. But just for, yeah, matter of fact, we close back above this bearish fair value gap. So now I would like to see this old bearish fair value gap that came support, but we can pretty much get rid of it. I would want to see this to be respected. If this is being disrespected, I would look for a inversion of this for a delivery back higher. Bullish volume imbalance right here. Just looking at the next few more candles. Let's see if we can hold this inversion. We do not want to see a close above it. Alright, and this was pretty much a quick scalp to the upside. How could you have gotten into this trade? We closed above our most recent discount that price has left behind, this bearish fair value gap. We would expect lower prices after a market structure shift, but we closed back above this discount. We closed back above the 50%. What do we do then? Right here, this becomes a new bullish inversion. You could frame a quick scalp, let's say from the 50% or right at the high of this inversion, and target 2 handles or just target 1 handle into the high of this fair value gap. Just for curiosity, my own curiosity right here to satisfy my needs, I want to see if we're going to use this now as support, since we disrespected the most recent bearish fair value gaps that price has put in place. This tells me that we're starting to get into bullish order flow. If we were still bearish, we would have used them to deliver lower. We didn't do that, so now we could expect higher prices really. We get back inside of this inversion, we get some rejection, bearish volume imbalance, but we closed it in. So let's see what we do around our old bearish fair value gap. We leave behind a new bullish one. So now all my focus goes onto this one. I would not like to see a close back below this inversion and this bullish fair value gap. And there we go. At this point in time, our bias would have been switched to bullish order flow. Doesn't matter what this market structure shift says. We're not looking for a pattern where we have a market structure shift. Where's the best fair value gap we could enter on short? Right here and right here. Okay. And then you're still in this trade. Your stop loss might be somewhere up here. And you're like, nah, it might still reverse, mate. It might still work. Well, let me tell you one thing. It wouldn't. And at this point in time, order flow already shift. And you're just exit liquidity. Very simple. So we can continue this. This works throughout all the time, but you don't want to be sitting there 24/7 interpreting the chart or actively listening. What did we leave behind? We closed above this old bullish fair value gap. We had no hold up in here because this used to be an inversion. We left behind a new bullish fair value gap inside of that. Let's see if it can hold us. We wicked inside of it. We continue to deliver higher. Buy side. Okay, we got one more wick lower. Let's see if it can still hold. Alright, that's very typical for the rollover period between New York and between London and New York. We see we still hold this bullish. Now this is our old inversion, this bullish fair value gap. No reason to cut risk. And yeah, we eventually cleared buy side. So only this move from the 50% level. Easy 5 handles. And this is how it's done, guys. Buy side liquidity taken. Alright, we had a high confluence area. This old bullish fair value gap that kept holding support. We cut through it. It kept holding resistance. We cut right back above it. We keep holding support. Inside of this old fair value gap that's still relevant, we have a new bullish fair value gap, and we also have this inversion. We would also have this bearish volume imbalance, which kept holding resistance, delivered us into this bullish discount. Once we close above the inversion, we have higher confluence, right where those gray boxes overlap. Same for here. We close above it, we use this inversion. And yeah, we eventually delivered into this buy side. Very simple, straightforward trade. could still watch those levels, those volume imbalances that price has left behind. Because right here in this move to the upside, there were no volume imbalances, and I would still reference them. Like this. And then also like this. We keep holding. All the wicks kept holding those VIPs. Very good sign. We closed right at the low of those wicks, but yeah, still high confidence, high probability for this to play out. Very simple trade. Alright, that's it for this London session recap. It's already a 30 minute long video, so I hope you enjoyed it and learned something. I've never traded this London session before, and as you can see, we had a spoof out market structure shift. We kept holding, we actually kept holding this bullish fair value gap, closed back above it, used new created discounts to deliver us higher back into buy side. Very simple. Here we had a 2022 setup. We cleared short-term low, our sell side liquidity, market structure shift, displacement, wick back inside of a fair value gap, continuation higher into buy side. We took off one contract here for 5, and this one inside of this bigger 5-minute bearish fair value gap for 10 handles. We took a short after we closed below this inversion, paired with this bearish fair value gap and this inversion 5-minute to secure 5 handles right here at the low of this fair value gap. And this would be a $1,000 day. Only winning trades. Pretty clean, if you ask me. I'm also super excited about that because what you're watching right now is me practicing. This hasn't been rehearsed or anything. And that would be a waste of time for me actually. Why would I look at the 1st of August before I record this video, then I do it again? I just use the opportunity to practice, and recording it also, yeah, gives me that little bit of help, I could say, because then I can't fool myself or cheat myself, because you guys would see that as well. Alright guys, I hope you enjoyed watching it, and if you have any questions, make sure to join us on Discord, because I can answer all your questions there, or simply leave a comment. And yeah, I will see you in the next video. Take care and enjoy your weekend.